All right, so the market started the week off on a good foot, though it was a very, very small move. And so we'll kind of break down, the implications of such a small range and such a small move on the markets today. We have a lot of important things coming up in the next couple of weeks. Inflation later this week, and the FOMC meeting where we're expected to get that first rate cut again next week. There's a lot on the docket here. But I don't think it's enough to say necessarily that we're going to be like this every day. So we'll kind of talk about, again, like I said, the implications. There was some, even though the stock market didn't move very much, there were other markets, other intermarkets relationships, like in bonds and in the dollar, and that did move. And gold continues just to break out against the S&P 500, and that's generally not been the best sign. So there are some relationships that are kind of throwing up some red flags. We'll show you what those are. Nothing imminent, but just some red flags to pay attention to. And then our sector rotation actually did look positive. I'll tell you what I'm talking about there. And then within that rotation is where we're going to go for our trade idea of the day, a stock that itself looks like it's breaking out to the upside, and we'll talk about how to trade that. So let's go ahead and get started. Today is Monday, September the 8th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, let's go ahead and take a look at the S&P 500 with the market forecast indicator. You can see it was extremely small range today. Really, again, remember, this is a very, very low ATR, and we were less than half of that ATR, of that very extremely low ATR. So as a result, the near-term line continued lower, even though, again, we weren't down today. We're actually up almost 0.25%, but we were down from the highs of yesterday still. The momentum line rallied thanks to the move off the lows and today's gain. So momentum line rallied, but both lines pretty much sitting in neutral territory. So no real clear direction one way or the other. Though again, like I said, coming off of a little bit of a bearish near-term peak there. The intermediate line, because again, remember, the momentum line didn't get into the upper reversal zone, so it makes it less likely the near-term line will stay up there for very long. And here we are already outside of bullish territory already. The intermediate lines in the upper reversal zone, the market sentiment lines in the upper reversal zone, we're about 1.25% up above the moving average. So still a very strong bullish posture, dark green shading in the green line. So everything's still working from that perspective. The NASDAQ 100, again, has been relatively weaker because we actually have been getting bull tags. This intermediate line is not in the reversal zone, though it is rising in bullish territory. So we have the dark green shading and the green line. We're above the moving average. We did rally. We rallied yesterday or Friday too. So we rallied about 0.5% today, though again, still off the highs. So the near-term line dropped. Not into neutral territory, though. Still in bullish territory. The momentum line rallied, but also, came out of bearish territory, sitting at neutral levels. So both those lines, again, not a clear direction. And remember, there's been such a big curve here that now the curve is really flattening. We're really starting to go sideways, making it very easy to turn red. If and when we do get a move, because we'll get a move below the moving average at some point. We always do. So it's just a matter of when, and so considering how flat it gets, it makes it easier to roll over, right? And that's when it turns red there. So it's very hard to get a red line to get the moving average to turn lower when you're that steep of an angle. As it gets flatter and flatter, it makes it easier to the more you spend time below it. To turn it lower. The Dow Jones Industrial Average was also up 0.25%. Again, off the highs yesterday, so continuing to bring the near-term line down. It was also out of bullish territory like the S&P. Strong bullish posture still, though, so dark green shading in the green line. Market sentiment line is falling, still at pretty high levels, though. And the intermediate line is still above the market sentiment line. So we're still okay from that perspective. The momentum line bounced, but did not get out of bearish territory. But still, no real clear direction on either of those. And then finally, if you look at the Russell 2000, dark green shading in the green line, this has been the most bullish out of all of them. The market sentiment's falling, but I think that's mainly temporary. It's just kind of flat. The intermediate line is rising, and it's above the 90th percentile, so very strongly bullish. Again, off the high, so it brought the near-term line down, but still easily in bullish territory. It's just barely out of the upper reversal zone, so a lot more bullish from that perspective. And the momentum line was actually higher than all the other indexes, so it dropped today, but still, it did not drop in the bearish territory. Still at neutral levels. It's just, same position as all the others, except they're all coming up to this spot, and the Russell is still actually falling to this spot. So, the main theme is still like a very strong bullish posture, very weak range today. So the market not really doing much of anything as we approach CPI this week, and then the FOMC, the Fed rate cut that's widely expected. And now people are talking about 50 basis points, but widely expected rate cut coming into next week. So that's kind of what the market seems to be just kind of grinding towards at this point. All right, well, that does it for our Market Outlook preview video. If you want to unlock the full version of tonight's video, scroll to the bottom of the YouTube channel here, scroll to the description or the pinned comment down below. It's got a link to today's blog post. You have to be a foundation member, at least a foundation member. All of our subscribers get access to the full Market Outlook video, but it starts with our foundation tier, just $29 a month or less than $1.40 per video. You can, the link down there is a sign up for that. And like I said, you can unlock the full version of the video along with the trade idea that comes at the end. Every Market Outlook has a trade idea at the end. You also get access to the Market Outlook live trade tracker. That's when we actually put on the trade before the market closes. So you get access to that before the evening. And we manage all the old trades that we're still in from old Market Outlook videos. And you also get access to our Market Outlook live trade tracker where we track the results of all these trades throughout the year. So all of that you get for, like I said, just $29 a month or less than $1.40 per trading session, essentially. So thank you again for watching. Remember, subscribe to our YouTube channel, hit that thumbs up icon, comment on the video, share it with anybody else you think would be interested. Follow me on Twitter at DavidSettle42 for more content between the videos. So you can check that out there. You can also follow me on LinkedIn and Facebook or any other social media platforms. Like our content on those platforms too. It helps get our content out to all of our followers. Thank you again. Have a great rest of your Monday night, everybody, and we'll see you all tomorrow.